It is confirmed, ladies and gentlemen, that margin calls on a massive scale are going to be coming here in the next couple of weeks. And before you guys say, hey, you're making another prediction about the AMC MOS, no, I said margin calls. That does not mean liquidations. That does not mean directly covering on their short positions. What that means, if you guys are unfamiliar with how margin calls work, I know a lot of people don't really go over the mechanics behind a margin call, but when your portfolio drops below a certain value, whether you're a retail investor, institutional investor, a hedge fund, or anybody, margin calls happen across the board. It drops below a certain value, the brokers, the bank, whoever it is, calls you up and says, hey, you need to deposit more money into your portfolio, or here in the next 2 or 3 days, we're going to liquidate your portfolio, pay ourselves back, cover on your short positions, and you will get to keep whatever is left over, no matter what kind of gains or losses you have in that portfolio. That is a margin call. Now, as we do know, when you short a stock, just like if you go to sell a put, you have to put up collateral so the banks know that they will get repaid back. So when you do see these margin calls, it can come down to a point, and it usually does during large short squeezes, where they get the margin calls, they have to cover on their short position to get that collateral back to service the whole entire margin call. And that's what I'm saying could be coming here in the near term future. We got a lot of news today, a lot of very spooky headlines for the markets. So I want to go over all of that and what that means here with you guys, as well as all of the data that you need to know around AMC for the day. So do hit that like button, do subscribe to the channel, and check out the links down below in the pinned comment as well as in the description to join the trading community. Follow me on Twitter, both those links pinned in the top comment, and then get yourself free stocks with Webull, Moomoo, and Public down below in the description of this video. Thank you guys for those of you guys that went ahead and did that, but let's talk about what is happening right now. So we have literally 5 minutes left of trading right now. Markets are coming down. You've seen about $2 billion market on close to the sell side. So about 10 minutes into market close, you do see that last final move, and it gets very, very volatile, and we are seeing that to the downside. So that is part of this thesis on, what is going on with margin calls is this really bad close that you are seeing. And I don't think a lot of people fully realize, but we were down about 1%, a little bit over 1%, down to $415 on the SPY, ran all the way up about $13 to $427, got some major gas, a huge rally right here, billions and billions of dollars pumped into the markets, and then we lost all of that. Now we are almost down to 415, and by the end of this video, we will likely close around 415. So the situation is not looking good in that simple aspect. But take a look at some of the headlines that we are getting. This one is very, very scary to say the least. It says the U.S. could essentially shut down Semiconductor Manufacturing International Corporation or any Chinese companies that defy U.S. sanctions, the Commerce Secretary says to NYT. That is huge. I'm going to go ahead and retweet that. So make sure you guys follow me on Twitter for all of this news. But nonetheless, to shut down the Chinese economy is much different than shutting down the Russian economy. We do very little business with Russia directly, as they don't do as much business with us. But China, on the other hand, if we have to start sanctioning them, that's a whole new situation. And I think you will see certain aspects of this. I think it's very possible that, China is already helping Russia. So you're going to start seeing some kind of sanctions along that line. And that's going to have, like I said, a much deeper impact to how the economy operates. And that's really where you start to see more fundamental hits to our businesses, to our companies that are listed here in the American exchanges. Now, you are seeing a lot of other news as well, some things that are very, very interesting. Pepsi suspends sales in Russia. So does Coca-Cola as well. And Serbia to ban flour, corn, veg oil exports from March 10th. So a lot of this kind of news, like I said right there, Coca-Cola suspending operations in Russia. Amazon grocery picking workers to work for Whole Foods. Another weird one right there. But Chinese companies that aid Russia could be shut down, U.S. Commerce Secretary tells NYT. And that's the same thing that we just seen. So you're definitely seeing a lot of that verbiage coming back to life. You're also seeing Ferrari and Lamborghini suspending business with Russia. You did see Starbucks as well as McDonald's announced alone they are closing more than 1,500 locations in Russia. So this is taking a step in the wrong direction for the markets, and I do think you're going to see the markets taking sharp moves down here in the next couple of days, next couple of weeks. The biggest thing to contend with is going to be the Fed and the CPI data that is coming out on Thursday. That CPI number is going to be very, very high. There's a lot of talks about it coming in at possibly 10%. So that puts a lot of pressure on the Fed to possibly raise rates. But at the same time, the reason inflation is going up so much has nothing to really do with what is going on with the Fed. It's really the energy sector as well as the food sector. A lot of wheat, corn, and sunflower oil come from Russia and Ukraine. About 20 to 35% of all of those different products. 80% of sunflower oil alone comes from Russia. So you're seeing inflation, wheat as well. In that aspect, commodities are going crazy. And then, as we know, you're seeing oil taking dramatic moves to the upside. And you've seen gases going up. So it's a weird situation we are in right now. The Fed can't do nothing, but at the same time, they really can't do anything about the inflation that we are seeing. And it doesn't look like things are going to get better anytime soon. And once we do sanction China, that's when you're going to see the real margin calls coming in. Because as well as that, if you think about this more logically, there was a lot of investment in Russia by institutional investors, hedge funds, as well as banks. But there is much more on a almost 100 times larger magnitude of investing by American investors into China. Pretty much everybody invests in China. Even Charlie Munger invests in China. Warren Buffett invests in China. Even your big time players are investors in emerging markets. So if you start to see some of these sanctions coming out, it's going to be a very bad thing for the markets. And margin calls essentially happen on a mass scale when the markets fall in a dramatic way. Like we have seen some margin calls because the margin debt, as far as back in October 2021, was $935 billion. Now it's sitting at $829 billion. What does that mean? About $110 billion of margin debt has been covered. A lot of that, a majority of that, would likely have been your retail investors that were over-leveraged in a lot of bad companies with no businesses behind them, and they fell 90%. So hey, you start to get margin calls and you get rid of your margin. By and large, the margin debt is still very, very large in the American stock market. So when you add all of this together, high inflation, a Fed that is forced to do something, the economy slowing down naturally, as well as all of this longer lasting sanctionary inflation. That's important to differentiate between supply constraint inflation, but food price inflation, oil inflation that the Fed can't do anything about. And then if we're talking about shutting down the Chinese economy, that's going to shut down a very large portion of our economy as well. So we're going to have to wait and see how this does develop. This is going to be the biggest thing that market participants start to pay attention to as we do head along into the future. Nonetheless, the war aspect of it, basically at this point, it's starting to look like China, Russia, Iran, even North Korea against the rest of the world. That's not what we want. So there's a lot for the markets to be fearful. I do think there is margin calls coming. The way a margin call for a hedge fund turns into the MOAS, by and large, when a lot of hedge funds get margin called, they go, hey, like I said earlier, cover on that short position, get my collateral back. But generally, you need to see AMC have some kind of catalyst. You have to see AMC go up, and then you will see that pressure from both sides. Not only is a hedge fund's portfolio dropping, they're also starting to lose on that short position at the same time. It compounds those losses at a very fast rate. So I do think it is confirmed. Margin calls are coming. I can't tell you the exact day or second it is going to happen, but I do think with these headlines coming out, that is shadowing what is to come, and I think that is going to get bad here in the next couple of weeks. But like I said, I will keep you guys updated on exactly what happens in that aspect. And if you guys are unfamiliar, Biden, he did ban all imports of Russian oil. It doesn't account for much of our oil, but it definitely jacks the price up across the globe, because oil is traded as a global commodity, not country by country. And there's also talks of Russia directly sanctioning and doing export controls on a lot of different products as well as oil. And we will probably get more clarity on that here in the next 5 to 10 hours. Russia, that side of the world, is kind of sleeping right now. So once they wake up, we'll probably get more headlines of that after futures are open by the live stream later on tonight. So you guys definitely want to come join us on that. But now let's get into the specific AMC data, and the markets are closed, and still coming down quite rapidly on the S&P 500 here in after hours. So it is a very volatile situation. AMC did close up 1.15%, actually up in after hours just a little bit. So that is looking very bullish, as the markets are essentially falling right now. So I think that goes to show the strength that AMC is showing at the current moment. We'll go back to the technicals in just a second, but the Ortex data is giving us 20.94% short interest of free float, 107.83 million shares that are sold short, cost to borrow max of 2.32%, and the utilization of 100%. The days to cover is sitting at 2.48 as well. Utilization still at 100%, cost to borrow max still staying the same at about 2.32%, so not too much has actually changed in that aspect, so things are looking pretty good. I do want to see the cost to borrow max going up as the utilization stays the same, and that will give us a gauge on where hedge funds and institutions that own AMC stock are willing to lend it out at, and what kind of interest rate they need to lend out their shares. So looking forward to that. I want to see a move. The cost to borrow is not moved at all. Now, as far as the option activity, you are looking at 31% positive order value for the day. 8 orders totaling $772.94 thousand. Not a big dollar amount right here. $772,000 is not a lot when it comes down to it. 8 orders is nothing comparatively to what we usually see. Like on yesterday, we seen $8.38 million of option orders placed on AMC stock, with 53% of that being bullish. So it's a very slow day, about 10 times slower than yesterday as far as the option activity on AMC is actually concerned. As far as the max pain, that is at $18 by this Friday. And just to reiterate yet again, on Thursday you do have continuing jobless claims. You do have core CPI year over year. That it stands for Consumer Price Index. That is your measure of inflation. That's going to be the next catalyst for the markets to freak out about, and they likely will, because it's going to come in very high. A lot of talks about 10%, but the expectation is about 7.5%. So if we come in much higher than that, you're going to have a terrible day in the market. So be vigilant of that. Keep that in mind. The initial jobless claims as well comes out at 8:30. That is a high volatility expected event. So a lot of data at 8:30 on Thursday. So if you guys want to trade any of this, make sure you guys have your trades finalized by the end of close of trading tomorrow. The Stocko Tracker data expiring by this Friday, you're looking at about 3,100 calls that are in the money, 107,000 calls that are out of the money. As far as next week, that's where things get very interesting. We have 5,100 calls that are in the money, 316,000 calls that are out of the money. So if we do see these margin calls coming, and we do see some kind of catalyst, or just anything really, it could just be people buying the stock in massive numbers, that starts to happen, and you do see AMC start to rally, you could see a pretty big continuation effect just based off of a gamma squeeze and people buying the stock. You don't even have to see covering to see a big move, especially when the price of AMC is suppressed so much. And you guys can also see we closed above $15 per share. That's that key level. You see a lot of demand under $15 per share. Like right here, you fell under it for about 25 minutes and then came right back up and never even came back down to these levels, regardless of what the markets were doing. This very rocky roller coaster, typically, especially by the end of the day, you would have seen AMC plummet into the ground. Now, AMC did trend down just a little bit, but you definitely didn't see that sell-off into the close of trading today. So I think this just confirms yet again, $15 per share is really that max pain, and you have already felt most of that pain, if not all of that pain you are going to feel. Sure, could you fall under 15 for brief periods? Yes. That is very possible, and I would expect that to happen. If the markets do fall 20 or 30% from here, you would definitely see AMC fall under that, but you would see a very sharp recovery at the same time, unless something did affect the movie theater business that is unforeseen right now. But I think it's highly unlikely something could hurt the movie theater business at this current moment. I don't believe AMC operates at all in Russia. Could be wrong there. I don't think so. I don't think there would be too many adverse effects. I don't even think they operate in China as well. So could be a bit of a safe haven after all, considering we are at these fundamental prices. As far as some of the other technicals, the MACD is pretty much neutral. It's not bullish. It's not bearish. It really isn't doing anything. The RSI is sitting at 38.91, and the key technical levels, like I said, $15 for the support. As far as the resistance, that is at about $16 per share, and then almost $17 per share right here. So looking good, looking very bullish by my definition. The fact we're staying above 15, definitely a huge sign. The volume has been pretty low in this 30 million range. So once we do see high volume, I would expect to see a pretty decent rally like we seen back here February 24th, 54 million shares traded hands, and we went up 12.5%. So it's a waiting game at this point. When are we going to see volume? When do we see margin calls? And that's the hard part, is when is it going to happen? We know it's going to happen, but when is it going to happen? So that is going to be all for this video. If you guys want to come join the trading community, link down below in the pinned comment, as well as check out the links down below in the description of this video. Thank you guys for watching, and I will see you in the next one.